Everybody, today is Wednesday the 18th, and the markets got hit a little bit here today. Not really a big surprise. We came up to the declining 5-day moving average and then rolled over. As I pointed out, you can see on Twitter, you can see it on the side of the website. We came below this volume weighted average price from yesterday's low, and that's pretty much where it gave it up. So, there are clues out there if you're paying attention. The next level of potential support is found at the conjunction of the volume weighted average price off of this high and this low. That would put us down at about 437 and a half ish. We also have the 50-day moving average at about 434. So, 433 and a half. I think it's likely that this slows us down in here. Then we get a bounce before the 50-day moving average, but we'll see what the market does. We don't have to be a buyer at that level. It's just a level of interest on the way down to see what the market says and reevaluate the risk environment that we're in. The NASDAQ broke below the volume weighted average price that we had been looking at from the conjunction of those two volume weighted average price levels. And now it looks like it's headed for a test of the volume weighted average price from the May low. And in this market, that lines up pretty closely to the 50-day moving average. Again, it doesn't mean it's a place to buy. I have never, ever told anyone to buy pullbacks. It's a place to look at and assess risk and see what happens there. We had the same thing happen in this market that we broke below yesterday's volume weighted average price from the low and kind of gave it away from there. Anyways, it was a volatile day, and the Russell 2000 continues to be garbage. This 200-day moving average, this is what it means, by the way, for a market to correct through time. This market has done nothing since February, and now here it is at the 200-day moving average. Back in February, we were, the 200-day moving average was 165, and this market was up at 200. We were 15% or about 8% above the 200-day moving average. Now we're right at it, and the market's at the same place, correction through time, with a declining 50-day moving average. The 200-day moving average might get a bounce, but we'll see how it acts when it gets down to the bottom end of this range. As far as important volume weighted average price levels go, we have the volume weighted average price from this low, and that would give us a nice little shakeout below this level, and I would be more interested in buying after a shakeout down to this volume weighted average price. I wouldn't want to be a buyer in here. Everyone else has already done that. That game is over. What we need to do is have those people flushed out, have them think it's the end of the world, then it kind of clears the way for a bounce. What that bounce does from there is anybody's guess, but that's the way I'm looking at it. Semiconductors continue to be weak. They broke that level right here, and we're seeing it continue to give back. We're now down to the volume weighted average price from this low. Below that, we have about that 250 level. Semiconductors on a 15-minute time frame continue to show a very clear pattern that says don't buy these things unless you're an idiot, and that is lower highs and lower lows below declining 5-day moving average. If you're an idiot, congratulations, you've got losses in your account, and you're buying the pullback the way they train idiots to do. IBB has pulled back a little bit in here again, and it's kind of doing what we wanted it to do if this is going to set up. Now, I'm not thrilled about this market, but we spoke about the fact that it did get extended. It needed to pull back. What it's not doing is holding the 5-day moving average. What it is doing is holding the volume weighted average price for the week, and it's also below the VWAP from the peak. So, if this biotech group is going to be the savior for this market, one, I don't think they have the power to do that. It's going to have to do something like this. I'm not interested in buying the biotechs right now. They're still in pullback mode from an intermediate term perspective or consolidation. Financials, again, this is why we don't buy pullbacks. You want to buy pullbacks, go somewhere else. I will never tell people that that's a good idea. Buy after the pullback has established itself. You'll never buy the exact low, but you'll have realistic, consistent returns and avoid nonsense like these super clear patterns of lower highs and lower lows. Just stay away from that stuff. Energy names, what's the pattern? Lower highs, lower lows, below a declining 5-day moving average. Don't be dumb. Don't buy this garbage.